Good morning, this is Tommy Lackey with Relativity Capital Advisors and Power Investing. Today is Monday, October 4th, and we're going to go through another sector drill down today. After covering energy last week, which worked out pretty well, we're going to cover the financial sector this week. Okay, but before we do that, let's review a little bit over energy. It had a very strong week last week, as we'll see here in a minute when we start looking at the RS rankings. And the reason that's important for us to find areas and sectors that perform well, especially like energy when they do, is that energy right now is only about 2.4% of the market cap of the S&P 500 and only about 3.9% of the market cap of the Russell 2000. So obviously if we can find areas like this that are underweighted in the overall indexes and then take advantage of them when they're outperforming, it gives us a great opportunity to outperform ourselves. So what we're going to do now is let's go ahead and dive in. I've taken the liberty to go ahead and mark some areas and things like that in the essence of saving time and making sure that we can get through the sector and all the subsectors reasonably. So we're going to go ahead and first start with our universe page, and we start in the section where the equal weight sector RS rankings. As we can see, energy remains at number one. On the top with 100, had a 7.4% return this week for the equal weight index that we do. So it was a great week and glad we profiled it last week. Hopes that people were able to take advantage of it. Now this week we're going to cover financials, not just because it's at a 91 and number 2, but really because of this progression we see here from a quarter ago at 27, a month ago at 55, a week ago at 82, and now at 91. Again, being a 3-month relative strength ranking, we can still get in early enough, even when we are up in the higher rankings oftentimes, to catch the meat of the move, which is what we're really trying to do. Now, when we go down here and we take a look in the equal weight subsectors, we can sort here for financials, and we can take a look and see our financials come as a ranking of 84, 63, 82, 55, 96, and 86. So some pretty strong rankings. All of them are in the top half of the relative strength list. And we can also see that the only one that's really, or actually none of them, from here, are really in the RS movers as of this week. But the sector overall has been making its way and kind of marching higher. So let's start off with the actual sector page. Again, we start on the top with our RSI chart, and you can see the relative strength rankings versus all the other sectors have been moving up higher. The 6-month is still below 80, but the 3-month and the 12-month are both above. In this table on the right, that's the first 3 you're going to see is versus all the other subsectors. And then when you go down to a subsector level, we'll have one more row in here. But as you can see on the chart, the RSI is trying to move back into a bull range in financials as a whole. But overall, over the last 2.5 months, we have a really nice looking setup here. Looks like it has, not 2.5 months, since June. We have a really nice looking setup here. Looks like we're at the potential of a breakout area. We moved flagged sideways this week, but has a good, strong opportunity. One thing I do want to note here as we look here is notice how the RSI came up here, stayed in the bull range, but as soon as it came down and broke this RSI 40 is kind of we went to our sideways or somewhat of a bear range. Bear ranges don't always have to be a strong pullback. They can be a consolidation of time as well, as we see here. From the breadth view of the whole sector, we can see 78% above their 200-day moving average, 70 above the 50-day moving average, and 74% above the 20-day moving average. All good, strong numbers that we like to see. We also see the McClellan summation on this last pullback never broke the flat line or went below 0, showing that there was some underlying strength as the rest of the markets pulled back. Moving down to the next section, we find our relative comparative, and we can see that versus all of our comparatives, this one is currently moving higher and started about a week and a half ago off this last set of lows. In the percentage making new highs and new lows, we had some clustering here, but in the longest term, the percent making new 63-day lows, they just didn't get down there this time versus last time when you saw a little bit more of a clustering there. shows us again that there's some underlying strength here, and then we flipped right back and we're back above 30%, making new 10-day highs. Now on the sector page, we will look at two more grids here before we move on. One of the grids is the subsectors ranked versus each other. Regional banks on top, insurance on the bottom, and here you can see how they kind of run through over time. The color coding helps you visually see when it's picking up and moving itself in the right direction. The next grid, or the relative strength rankings that we have here, is on the ETFs. We can see here our regional banking and bankings are really just dominating at this point, both in the relative strength and the relative strength movers over here on the right, and had good strong weeks as well. These are sectors that over the last quarter are up between 5 and 7%, so there's definitely some room they can move if they want to. And then down at the bottom, obviously, we have the all the stocks in the financial sector ranked. I have them here sorted by the RS movers. I'm not going to go through them this way, but what I am going to do is point out some things I see as we go through each subsector. On the sector level, I'm going to point out the ETFs that I saw that I felt had the best opportunities for potential breakouts or a move. First, we have IAT, which is the regional bank sector. I chose this one, but the KRE and the KW ones and all those look very similar. Good strong move sideways and building its base, and looks like after this big cup it is trying to kind of flag out to a handle. Small cap financials are more on the basing side, working out of the small area, trying to get back up towards these highs. Equal weight is still already up towards those highs. You can see this particular regional bank ETF is one that is more working out of a base area. It's not quite as strong as IAT just due to the makeup, but it has broken out and flagged sideways for the week. And then IYG, Financial Services ETF, is up here towards the highs. A little bit more of a messy range. However, it has moved in, trying to move into a bull range, and the weekly RSI bull range has never really given up much area. Now let's move into the subsectors. We start with the regional bank subsector. This one has a similar chart pattern. As you can see, since wrong area to pull down. As you can see, since March or April, this one has been moving sideways. It kind of gave it up here during the summer, and now is trying to build its way back up and potentially break out. As you'll see here, as we pull down, the real lows, I would say, or the real damage, I guess, when it comes to some of the areas in this one kind of came off this last kind of washout area. However, we saw our kind of troughing move in breadth back here when it came down during the summer. Currently, you've got 88% of the regional banks are above their 200-day, 95% above their 50-day, and 99% above their 20-day. So this is an area that really is holding strength and has a lot of players moving right now. It's a very large sector too, so there's a lot of components to keep it up in that particular area. As we move down to the relative comparative, we can see this has just taken off over the last couple of weeks and continues to improve even as it looks like it's flagging out here on the chart. On the new highs, making new highs, or percent making new highs, it's up in the 30-40% on the 10-day, it's up in the 30% on here, and the 28% on the 63-day. This right here is the first time we've seen it get up here since late last year. Okay, now we move down into regional banks, and as you can see here, I have it sorted by the RS movers as well. Instead of looking through these on this, which you can do, and you can go by one, I have already kind of culled out some, marked them, and we'll take a quick look at those. We're going to start with IBOC. This one right here, you can tell it's more basing type area, working up towards the top of this. RSI is in a new bull range. It held on the pullback, and the weekly held on these pullbacks as well. EFSC, another base break. FRST, kind of in the middle, but I like the way it held the weekly here, and it looks like it wants to head up and test that RSI bull range. BXS is another one that kind of based out and looks like it flagged above that breakout level. ABTX, FCF FMNB, Farmers Bank. Again, you can see right here, good, nice double bottom looking area that's breaking out of as of Friday on some good volume. GABC, more base type action. FBNC, also well below the previous highs. FNB, well below the previous highs, but they all seem to want to make it out of this area, and they got some pretty good volume footprints coming in. GBCI. CADE is one that's up more closer to the highs. You can tell it looks like it may want to go for a real breakout here pretty soon. You have MSBI, more of a pullback type play. Looks like it wants to reverse this trend or this downtrend line after breaking it. RSI has not moved into a bull range yet, but never lost the weekly bull range from before. Let's correct this so I don't put it in the wrong area. And CBSH, similar type look. RSI is already above 60 here. Went a little lower here. So this is kind of your pullback. Hey, I want to play something for a fast, stronger move if it wants to kind of play some catch up. Next is thrift and mortgage finance subsector. You can see here we have a similar chart coming across, already up in this breakout level. Strong move on Friday, and the RSI is already back above 60 in the bull range with a CFG up in the 100 area. Again, as I was mentioning earlier, here's the relative strength rankings versus all the subsectors. Next three are the relative strength rankings versus just those in the financial sector. These thrifts and mortgages have 71% above the 200, 86% above the 50, and 89% above the 20. Definitely moving into a better range here. Summation never lost the flat line. We have a curl up here on all the relative strengths versus everything we compare it to, even versus financials, but as you can see, it has not been an outperformer for a long time in the financial area. Percent making new highs, new lows, still just starting to wake up here. And in this particular subsector, regional banks, I'm sorry, I didn't go through the regional, but yeah, I did. Okay. That in the regional banks was not all of them. Let me go back a little bit and look at some of the other breakout type. PACW, CFR. You can tell these are all closer to the breakout area. CIT, FBP, CMA, UMBF, ISBC, TOWN is more of the base type break. OZK, nice looking weekly patterns on a lot of these. EWBC, PNC up here at breakout area. LOB is more of a base break, moved out Friday. Synovus moved out Friday after some sideways action. IBOC trying to move out. ESFC, FRST. Sorry, I had this already pulled down, so we're not looking at all of them. So now we can go through thrifts and mortgages and go over to those and go through those stocks. NYCB looking for a breakout, about to test those highs. MTG testing the highs, like the chances of breakout here. WD similar, it's moved a little faster the last few days, so it might flag out a little bit. Or, I'm sorry, that was cash. WD is looking for a breakout area. AX already moved strong, but right up at those highs. Could keep going or it could flag out some. PFS flagged. Looks like it may be ready soon. COOP, nice little kind of cut pullback type area, back challenging the highs. SACH, also challenging the highs. WSBF, more of the base type. SBT, looks like it's more of a base type. It had a really strong move Friday. Small float here, or not float, small volume here, and a very small company, so make sure you take that into consideration. RDN and OCN, both of them still look like they could be an opportunity. CFN, or CFFN, sorry, base type area. CLBK looks like it's getting ready to break out, and TRST is a pullback play, one of those that looks like it might be a bigger reversal in the early stages. Now banks, we move here, we can see in the banking sector, you have a similar to where it's still behind a little bit, not up at the highs, but it looks like it's setting up to break out of this little basing area underneath the highs, which kind of catapulted up to challenge those. Relative strength rankings are all improving. You can see in the breadth here, not as strong as the other. It's only got 74% above the 200-day, 62% above the 50-day, and 62% above the 20-day. But the summation has improved, and this one really kind of bottomed out back in the July area, again with some of these other banking areas, and this last little pullback was just kind of the retest. Relative comparatives are strong versus everything except financials. I mean, regional banks are really the ones killing it in financials. So we don't have it beating here, but the rest of them, as with all financials, it is improved versus the markets, or is improving. And then we go into these particular stocks. You can see I only marked a few because there aren't that many in the banking sector. JPM right up at highs, should be marked red. BAC right up at highs, potential breakout. BCS, a little more of an internal breakout. TD is a little more of a base, kind of sloppy, but it's got a double bottom look to it and starting to pick up on the right side of this. The weekly looks good, almost like a failed breakdown. And HSBC is more of your longer pullback on the weekly, undercut the RSI bull range, but diverging on the CFG, and the daily is still in the bear range here, so be careful. But over this area and moving back over these lows, you could see some strength out of this particular stock. Now, diversified financials and credit services subsector, again, run through this. We've had a nice sideways, got the midsummer pullback, and now back challenging the highs. RSI bull range has not lost itself since back here in the July area when all financials were having a tough time. This is when we all thought rates were going to break out, or actually rates were going to break down, and bonds were going to move higher. That has reversed itself some, so we're still going to have to see how that plays out because it will affect financials. But as of right now, rates are moving higher. You can see here 79% above the 200-day, 65 above the 50-day, 71 above the 21-day. Above the 20-day. And so the summation here has continued to move higher off those July lows, not hiding the fact that it wants to perform better. You can see here, these are just kind of grinding versus everything else. No big, huge jump over the last week or two, but also has not really underperformed very much. This one is starting to roll over a little bit versus financials as a whole. Let's see, because it's still kind of had, a nice lead back here, and it's still a fairly steady move higher over time. May just not be as flashy as the rest. Now, as financials and credit services, I only have a few in here. I have AXP, looking like it could go up for a breakout test. NNI looks like it's breaking out now. CURO could be going up for a test. Jefferies Financials up near a breakout area. It looks like it broke out and it tried to fail, and now it wants to make another attempt. ECPG right up at these highs on a nice rounding kind of base-like area here at the highs. They couldn't bring it back down. FCFS up in a nice little daily kind of base for the last couple of weeks. Nice tight weekly range here right under this volume shelf. ENVA is our next, more of a base type breakout, and ATLC more of a base type area. If it can move higher, held the RSI bull range and is in a strong bull range on the weekly. Brokers and capital markets. I did not pull this one back up. So we start at the top, and we look at the chart, and we can see this one tried to break out during the summer, and then it just kind of floundered a little bit. It's starting to roll over a little bit, relative strength against everything. Its breadth is not as strong, 80% above the 200-day, but 50 above the 50-day and 53 above the 20-day. So this could be a pullback, and now it wants to resurge, so you keep an eye on it with the rest of financials strong. But again, you need to know it's not the strongest sector or subsector in the sector right now, so play areas within it accordingly. As you can see here, versus the financial index or equal weight index, look at how much relative strength this has lost, while it's still showing relative strength versus the SPY and the QQQ. It's not against the universe. It's pretty sideways, and it's not against small caps. Now looking into the stocks here, again, you can go down here and get through them with these links, but but I've gone ahead and set some aside so we can move a little quicker. MC, we start with them breaking out Friday after a nice little sideways move for over a month. Stifle, nice sideways pattern. Looks like it's back up towards the highs, wants to challenge them. Raymond James up towards the highs, wants to challenge. LPL at the highs, wants to challenge. TBVG a little more internal. We've got a high here, and you can also see there's another weekly high here. But if we can get over, it could be a major breakout there. OXLC, this one has just had like a nice almost wedging type pattern, a declining or a descending triangle maybe, but it would have to break below that 7 area. FOCS consolidating here below the highs, looks like it wants the potential for another breakout. Has held RSI bull range a while. Weekly is still strong. GBDC, VCTR up near those highs. GHL is more of a basing type pullback play. So is Interactive Brokers. BGCP is pullback. Looks like it wants to challenge this trend line right here. And after coming below these previous lows and working back above it, we could be working on a failed breakdown right at 60. Let's see if it can get over it. COWN looks more like a pullback play. Weekly RSI never lost its bull range. Came down to this area of previous lows and now trying to reverse. That daily RSI bear range, though, we want to keep an eye on. And then we have ARES, which pulled back to a previous congestion zone. RSA came right to 40 and is trying to reverse, and the weekly RSI is up here well above 60. Could certainly turn up here and forge an RSI positive reversal. And our final sector is insurance. Again, the worst performing right now, but it's really just been sideways since maybe April area, a good while. And now it's just in the middle. It hasn't really been leading out or anything like that. Doesn't mean there aren't things we can find in here, but daily RSI bear range and the whole subsector, something worth keeping an eye on. Percent above the 200-day is only 62%, 50% above the 50, and then 54% above the 20. Summation is turning up above 0. So again, these are not horrible numbers. They are trying to turn up with the rest of the sector. You know, if you want to play the catch-up idea, this might be the way to go. But when I see things like this, to where it's just a consistent underperformer versus the overall overall index, then or sector, then it's just not something I'm that excited about. Other than a couple of specific holdings within it, if they look strong. As you can see, the ones I marked out here, MBI moved its way up to the highs very quickly. It can either flag out or go straight through. RSI has a strong move. It looks like it might be about to hit the nitrous. The weekly looks like a big positive reversal that wants continuation. AJG, this one right here is against the highs. Nice big cup. The base or the handle may still need some forming, or it may go from here. STC up near the highs. HIG breakout highs. EIE, this is a big pullback play that could be trying to reverse. As you can see, this RSI on the daily is trying to hold here. Weekly is in a bear range, so you're just going to have to be conscious or patient, one of the two. WLTW trying to work out of this basing type area. GSHD up near highs in a pullback type play. Mushy RSI here, which I love, with the weekly RSI not really overbought. MMC, another pullback type play. CB, Chubb down towards the previous highs, the previous kind of breakout type area here. Looks like it's trying to hold RSI 40 level, and the weekly's still in a good strong trend. BRO, Brown & Brown, looks like it's reversing up, holding its RSI bull range. AON, pull back in a bull range. And then Y looks more like a pullback play, but it did hold this weekly RSI bull range pretty well. So if we can continue to see improvement and get over that 640 area, we might play a little catch up on this one as well. So that kind of takes you through the financial sector. Hopefully that gives you an idea and some areas to look at. I know I went through them fast, but I'm trying to keep this at a reasonable time span. So again, this is our sector drill down for the week. This week we went through financials. Last week's energy continues to work well. Go out there, do your own due diligence, make these ideas yours, and hope everybody has a wonderful week. We'll talk to you soon.